We're not acting on one single measure or acting on one event. And that's what they're telling us to do, and not just Moody's, to implement an unprecedented series of structural reforms.
That was French Finance Minister Pierre Moscovici speaking after Moody's stripped France of its AAA rating. He said the downgrade will spur France toward even deeper economic reforms, so he's not too worried. But what about investors? Phil Tyson, Head of Strategy for Interest Rate Products at ICAP, joins me now. Phil, pretty muted reaction so far this morning. The 10-year yield's up a mere 4 basis points. Is that it, or might we expect more moves in the days ahead?
Yeah, it has been fairly limited, as you say. I mean, it's not entirely surprising. They've been on negative watch since February. We'd already seen the S&P downgrade, but I think it is reflective of some more fundamental problems in the French economy. I mean, Hollande has been sort of consistently pressing against Germany in its push for austerity, and they've done relatively little on the fiscal side. You know, in the economy as a whole, you've got the unemployment rate sort of pushing close to record highs above 10%. You've seen a wave of redundancies in companies like Citroën, etc., and consumer spending is sort of on an annual basis is in negative territory. Wage growth has been very subdued, and with inflation proving sticky, real disposable incomes have been falling, and conditions in the banking sector have been pretty poor as well. The government's financial transactions tax has weighed on bank lending, and the banks are heavily exposed to the European periphery. I think the French banks' exposure to the European periphery amounts to about sort of 17 or 18% of GDP.
OK, all that sounds fairly pessimistic outlook if you're thinking of investing in France. What about what about bondholders? Those funds who are mandated to have AAA paper in their portfolios, they will have to sell now, surely? Yeah,
I think that there will be some selling, but it will be very limited, confined only to those investors that have to hold the sort of highest rated paper. But having said that, you know, short positions in France against other European bond markets seem to have been cut, so positions are relatively clean at the moment. So there might be a little bit more selling going forward. And I've seen more and more people talking about French underperformance and structural issues as a theme going forward into next year. So it's something that could maybe gather momentum, particularly if we see the data in the economy beginning to weaken more substantially.
OK, I just want to throw one number at you. There was some analysis from one of the world's largest hedge funds this week that showed that France as a whole, including government, private sector and banks, their debt, France's indebtedness, is around almost 600% of GDP. That's higher than Germany by some distance. That must be cause for concern.
Yeah, it is a cause for concern. I mean, and you're right. And if you look at the overall sort of government debt levels as a percentage of GDP, it's one of the highest in the Eurozone at over 80%. It is more than on Spain on a government basis, too. So I think if you look at the growth forecast, the official growth forecast, they still look woefully optimistic. They've got to get this deficit level down from close to 5% of GDP this year to sort of 3%. Next year, and I think if the growth forecasts are too optimistic and its growth comes in negative territory as we expect, I think it's going to be the level of debt in France is going to become an increasing theme for investors to focus on as we move into next year. OK, Phil, thank you very much. That was Phil Tyson at ICAP. Well, for more on the implications for French banks, we're joined by Reuters correspondent Lionel Laurent in Paris. Lionel, does this mean that downgrades of French banks are now inevitable, and with that, their cost of borrowing will surely rise?
Well, for the time being, it's a bit of a non-event on the markets, but it is true that more downgrades are looking likely. Some fund managers are looking particularly at Société Générale and Crédit Agricole, which are two of the biggest listed banks for further downgrades. But it's really the very weakest entities, the ones that are sort of hidden from view, that might feel a lot of the pressure, because it was credit rating downgrades that hit unlisted mortgage lender Crédit Immobilier and even automaker Peugeot's subsidiary earlier this year. So for the moment, not a lot of worry, but yes, you know, downgrades could be on the way.
And finally, that analysis that I was talking to Phil about from a large hedge fund, that also showed that French banks, the French banking system, is among the most highly levered in Europe. Which banks are most vulnerable here?
Well, that's true. There's a lot of leverage in the system. It's a function of French banks' big balance sheets. They've profited from the past boom in cheap debt to really expand all over the world and indeed in the Eurozone. Now, they have spent the past year doing a lot to try and cut back. They've had to sell assets in Greece and elsewhere. They still have a strong exposure to countries like Italy. So that's another cause for concern. But really, people are going to be looking at what the banks do next in terms of cost to try and see how they can really keep investor confidence afloat in the coming months.
Lionel Laurent, thank you very much. Credit Suisse, the chart to look at today. The shares falling after it announced it is to restructure its asset management unit and fold that operation into its private banking arm. Top executives are to go too, and the change in strategy raises questions over the future of CEO Brady Dugan. Credit Suisse shares down around 2.5%. This is in stark contrast to Swiss rival UBS, whose shares leapt after it announced it was to dismantle its fixed income operation 3 weeks ago. In today's Deal Zone, Glen Strata. The Marathon merger is close to the finishing line after Glencore shareholders overwhelmingly approved its $31 billion takeover of minor Xstrata. Xstrata shareholders are also expected to approve it later on Tuesday, after Qatar, its second largest shareholder, said it would back the deal. Glencore shares up around 1%, Xstrata up around 2%. That's all from us for now, but join us every day at this time to take the pulse of the market. I'm Jamie McGeever. This is Reuters.